Hello and welcome to the Convergent video series for the week of December 7th. Top three things we're going to cover on the video this week. First, the markets were up, mostly on lots of stimulus hopes. Two, we're going to touch on unemployment and the November jobs report. And finally, we're going to touch on some other economic data points, in particular, the concerns we have around small business owners. Before we jump into the data, I hope you all had a great weekend. As a family, we had a great weekend here in the Pacific Northwest. The weather was pretty picture perfect. The sun was out most of the weekend, and we got out on a number of hikes and walks, in particular around Point Defiance Park in Tacoma. Just lots of beautiful views around the water and everything there. And so I hope you also had a chance to get out and enjoy your weekend as well. But before we jump into the data as well, I want to also touch on that we're going to have our second Advance Your Wealth live stream on Facebook this coming Friday. Topic this week is going to be the 5 biggest mistakes that homeowners make. So please tune in. We're going to have some additional information coming out very shortly on that. So stay tuned on that. So with that, let's jump into the data for the week. First, the markets were up about 1.5% on the S&P 500, mostly this week on a lot of stimulus hopes. There were some negative headlines around the Pfizer vaccine and some of the challenges they're going to have from a supply chain issue, but we did still see a strong momentum to the upside in the markets as volatility continues to come down and hopes around vaccines and stimulus continue to rise. And so right now, there's just a lot of tailwinds to the market. On the unemployment front, in terms of the numbers last week, we're still seeing similar weakness in the new claims for unemployment as well as the new pandemic claims that we've continued to see over the last number of weeks. Combined, we still came in right around 1 million of new claims for unemployment. So I guess the good news of that, though, is that although we've seen rising lockdowns, we're not seeing a massive increase in the overall number of new claims for unemployment. On the continuing claims, that number continues to drop. We're down to about 5 million on the continuing claims and down to about 20 million on the total claims for unemployment. And so those numbers continue to move in the right direction. However, as we've discussed multiple times on the video in recent weeks, we do think some of these numbers look better than reality. And one area you can see that is in the labor force participation rate. And so what we've seen since the pandemic is that rate's come down a couple of percent in a pretty severe way. And even though we've had a good economic move back up since the pandemic, this number has barely moved back up in that direction. And it may not seem like a big deal to go down a couple percent on the labor force participation rate, but when you think about having a couple 100 million people in the labor force, 2% by itself is about 4 million people. So what that means is that 2% of people that's no longer a part of the labor force is no longer counted in these numbers, meaning they're just not looking for work, maybe they've just retired early. And so it's having a big impact on the reality of these numbers, even though the numbers themselves are looking pretty good. So just something to keep an eye on in the near future on that. Some other economic data points we're watching closely is recently the OECD has come out with their updated economic forecast for the coming couple of years. And what you can see from the chart is the top line is the trend line that we were on prior to the pandemic. And then we obviously saw the severe drop during the pandemic and also a pretty nice V-shaped recovery recently. However, what they're expecting is that V-shaped recovery to level off before it gets back to the previous trend line and then to begin to go back to historical growth rates that we were seeing prior to the pandemic. And so while that's overall good to see our historical growth rates return, the problem is we never got back to the pace we were on prior to the pandemic. So all of that growth is just gone and lost forever based on these projections. And where you can see that the most in the United States especially is in the small business owner world. And so the small business owner job index or the small business job index is down severely. And we saw another very severe drop like this in 2008, but we did see a nice recovery coming off of that, and the number actually got back above where it was prior to the 2008 crisis. Right now, not only are we seeing a more severe drop off, we're seeing actually continued weakness in that number even as the economy overall begins to recover. And another area you can see that is in a recent survey of small business owners where about half of them are concerned that they may have to close their business permanently if there's not a meaningful improvement in the economy here in the near future. So bottom line, market continues to see strong momentum going forward as stimulus hopes continue, as vaccine hopes continue, and as just overall economic data will begin to turn positive in Q1 versus where it was in Q1 of last year. And so we've adjusted our models to take advantage of more of that short-term growth in the markets that we're expecting. However, as we talked about, there's a lot of other concerning economic data points out there that we're keeping an eye on, so that if those do lead to some increased volatility, we will be ready for that. So with that, as always, if you have any individual questions on your situation, please feel free to reach out. Otherwise, we hope you have a great week, and we look forward to talking with you soon.